Hi, this is Dennis Bethel with Nest Egg RX, and I want to thank you for your enthusiasm around our newest offering, the Baden Portfolio. We're excited to share the details with you in our upcoming webinar on August 19th. But today I want to answer the question I'm hearing from some of you, which is, why Pittsburgh? After all, if you've been investing in apartments over the last decade, you probably have assets in the Sun Belt states. Places like Phoenix, Dallas, Atlanta, Houston, Austin, Charlotte, Orlando. And for a while, these markets were booming. But that boom turned into a bubble as prices skyrocketed and underwriting got sloppy. I remember competing on a deal years ago in Houston, Texas. We were bidding against a foreign investment company on a property, and we basically had the same offer. But what they did was they put $1 million hard earnest money down on day one. Now, what does that mean? That means the money's non-refundable. So when they went and did physical due diligence, if they found something that they didn't feel they could remedy, something that would necessitate them walking away, they would also be walking away from that $1 million. It was non-refundable on day one, and they did that just to win the deal. That's the kind of thing that's happening in these overheated markets. Dozens of offers on each and every property, 2 rounds of best and final bidding, sellers squeezing every last dollar they can out of each deal, and buyers risking investor capital just to get deals done. Conservative, disciplined underwriting can go out the door when competition is fierce. To make the math pencil out, some will even assume year after year of astronomical rent growth, the kind that's simply not sustainable. It's not uncommon for people in my network to call me asking for advice with their investments with other companies. Many of them are fellow physicians. Just last week, I spoke with another physician about 3 properties she owns in 3 Sunbelt markets. She's in Houston, she's in Fort Worth, Texas, and she's also in Atlanta, Georgia. None of those properties are cash flowing and distributions have been paused. At first, I thought maybe her syndicator took floating rate debt and got caught when the interest rate spiked. But after reviewing the details, all 3 of those properties had fixed rate debt. That's great. So what was the problem? The problem was she was in markets that had massive oversupply. Now she's stuck in a bust cycle with no cash flow, declining values, and concerns that the apartments won't recover before the loans come due. Take, for example, Austin, Texas. Vacancy rates are up to 14% now, with a 9% decline in rent growth. Investors are really feeling pain in markets like these. The problem was never multifamily real estate. The problem was speculative operators chasing the hype in volatile markets. At Nest Egg RX, we saw that oversupply coming years ago. That's why we focus on stable, overlooked markets that don't get caught up in boom-bust cycles. One of these markets is Pittsburgh, Pennsylvania. It was recently rated as a top 5 rent growth market in the whole country, according to Apartments.com. Here's what Pittsburgh doesn't have. It doesn't have a flood of new construction, and it doesn't have a stampede of investors driving up prices. Here's what it does have. Strong household formation, solid job growth, durable demand for quality rental housing. Our newest project, the Baden Portfolio, is right in the Pittsburgh MSA. It's a 152-unit value-add opportunity with no direct competition within 5 miles. We're hosting a live web how we plan to modernize operations, renovate units, and target $5 million in equity creation in the first 3 years. It's a small raise, so if you want in, now's the time to take a closer look. Click the link below to reserve your spot for the webinar, or grab a one-on-one with me to get the details early. I'll see you there.